Amazon, or AMZN stock, just announced two interesting developments, the first of which is a 20-for-1 stock split. The second is a $10 billion share repurchase to be used opportunistically. We'll talk about what each of these mean potentially for the underlying business as well as Amazon stock price. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Amazon. AMZN is the ticker. So the first item that's catching a lot of attention is this 20-for-1 stock split, expected to be in effect as of June 6th. 2022. I personally look at these, type of events and I say, you're really just splitting up the stock. It's not a big deal. That's my initial reaction. I could understand the argument folks make, but longer term, if you're looking at this business, valuing things on a fundamental basis for, years at a time, thinking what's the value of this 5 years out, the reality is it's effectively taking a slice of pizza or a pizza, and instead of having it in 4 slices, you're going to have it, in 8 slices. And when you have that type of, event, or the equivalent of having 1 slice and splitting it up into 20 slices, when you do something like that, it doesn't fundamentally change the value of the pizza. It doesn't fundamentally change how much you can eat, the economic value of that pizza. But it is just, changing it into a unit that makes it a little bit easier to trade. And so that, can get some retail investment interest because it's going to be easier to do stock options with it. And that's part of the reason why you're seeing, this jump in the stock after hours, multi-billion-dollar contribution in this business just by announcing a stock split. Stocks up a little over 6% in the after hours to a little under 3,000. So what you're really talking about is that by June, if the stock price stays around the same, you're talking around $150 share price. Now, the appeal of doing something like this, so here's one aspect that could technically help the stock price, in addition to retail involvement and people being able to make more leverage bets with options because, it'll be easier to, let's say, place option bets because the stock price is lower, is another aspect is it could potentially, get Dow Jones Industry, index inclusion. And, the Dow index is just one of those like legacy indexes. It's kind of ridiculous because unlike you look at something like the S&P, which is based on market cap weight, which has its own problems, using a Dow index is based on the price of the stock, which is easily manipulated, as you can see. So like just doing a 20-for-1 stock split could get you the Dow inclusion. And if they were to do a reverse stock split, then you'd have, now it's excluded from the Dow because the price would just be astronomical. And so the Dow index is just one of the ones that's like, it's just a legacy and doesn't really make a lot of sense in my opinion, versus looking at something like the S&P 500. And so the other major development that's a lot more interesting, and by the way, if you feel like there's, an angle to the stock splits that, you feel like I'm not capturing, I'd love to hear it. So I'm effectively saying like maybe Dow Jones, inclusion with some sort of, the Dow 30 index, or you're talking about increased retail involvement, animal spirits, more option trading. So like that's sort of the angle. I don't really see a core fundamental driver here. The other main news item is the stock repurchase of around $10 billion. This is interesting because they're talking about doing this opportunistically from time to time. That is 100% the right way to do this, in my opinion. You don't want to say, oh, here's the stock, buyback, and we're just going to progressively do this each quarter, no matter what the share price is. You need to react to if the stock is cheap. If the stock is cheap, then you buy back. If the stock is not cheap, don't do the buyback. So, Jeff Bezos and his proteges, they have learned from Warren Buffett saying, look, the stock buyback should be opportunistic. Now, what's interesting here is this stock repurchase authorization replaces the previous $5 billion stock repurchase authorization that was approved by the board of directors in 2016. And they had previously repurchased. They hadn't even used the full thing. And so here it is, they're sort of upping it, replacing it. So instead of having like $3 billion left, now they can, redo it at $10 billion. But it's interesting that they previously did it in 2016. When I looked at the history of when exactly they did it in February 2016, which was like right around here. This is a price of sales chart from Koifin. and it shows Amazon price to sales over time. And you could see, the price had dipped significantly, and management was saying, this just doesn't capture the underlying economics of this business. Here it is. You have a very similar development where Amazon stock has dipped very recently. It really hasn't gone anywhere for the last year as the multiple has come in significantly. You could see price to sales multiple has come down very significantly from five times sales to 3 times sales over the last 12 months. So you could see that, impact has, really the valuation has gone better while this business continues to grow. And this is one of the key things I love to see with businesses is profitable businesses growing at a good clip and seeing that valuation come in. Because as I see the stock price, stay flat or go down as the underlying business is still growing, then I'm going, oh, this is like a spring. It's like you're pushing down on a spring, and at some point it could go back up, and that could be a nice tailwind for investors. So I personally love seeing it when you have valuation compression like you do here. And I know that during this period, Amazon was still growing their business. So this is what I like to see, looking at this. And so it is worth understanding. I did a prior video on Amazon, calling out it as effectively very reasonably valued, pulling it apart based on their various different revenue streams, saying, hey, this is how I think about this revenue stream. This is how much value I, attribute it to. And look, they have a lot of different segments, a lot of different things that's going to drive the economic value of this business. You have physical sales, like physical stores like Whole Foods. That's going to be much lower margin than, let's say, their online sales commissions that they're getting from third-party merchants, or effectively the advertising revenue that they're going to get. That's going to be much higher margin. AWS is a whole separate thing that already has much established margins, like 30% profit margins. So I in that prior video, I could leave a link to it. I go through each of those different business lines to sort of say, hey, what's a range of valuation for these things? Also possible that at some point Amazon could get split up. You could have, overreach by the government saying, monopoly or what have you. I don't think that's the case, but you could, you never know with politics and leaders what they'll end up doing. And so if that happens, you could sort of think about, okay, what would this business be if you excluded AWS, which is going to be a behemoth in their own right, So check that video out in terms of thinking about the valuation of these separate components. But, in that video, that sort of walks to this current valuation that I'm sort of penciling out here. And I agree, with management that valuation here indeed does look quite reasonable. I like seeing that they're doing this again. They previously did it at a very good time before the stock ran up significantly. Now, once again, I think the stock is quite reasonable, significant upside potential, let's say over the next 5 years, if they execute. And keep in mind, this is a hypothetical valuation framework. This is the summary of pretty much that video I previously called out, showing key segments about like how AWS could be in and of itself in 5 years from now, a $1 to $2 trillion company. Their advertising business alone could be $400 billion to nearly $800 billion in value. Third-party seller services, $200 to $600 billion. So you see a lot of this, their actual sales of them selling physical goods will actually be much lower margin, and it's not growing as fast. So that's part of the reason why I gave it, a lower, effectively it gets a lower component, when you're thinking about how much it contributes. But looking at all this potential, and this assumes the business still does, keep growing, it's effectively saying, yeah, you're currently around this $1.5 trillion market cap, which is just incredible thinking about, this is bigger than many countries Amazon has become. The reality is if they continue executing, here's a range of upside potential saying, it could compound at, let's say, single digits to nearly 20% annualized in the years ahead. Now, it is worthwhile to understand that, look, I'm a little more cautious right now, and I've done a couple of videos on this because of the macro framework that we're looking at here. I was already getting a little more cautious seeing the Federal Reserve saying, hey, we're going into a tightening. I felt they were behind the ball, with inflation, and they're effectively forced to raise rates. And so I'm looking at that, and now seeing the commodity picture as well, and effectively this economic shock, I'm even more concerned. And it does make me think that discretionary purchases could get, pulled back a bit, where folks are going to be saying, do I really need to go buy that toy or that whatever it is, pleasurable item, the discretionary purchase that you're going to get on Amazon? Do I really need to order it right now? Or, I'm just going to go to my local Dollar General store, and that's what, I'm going to go buy, my groceries, and that's what I'm going to do. And so I think there is going to be that dynamic. Now, Amazon is still one of the lowest cost players when you're getting stuff, but I think this dynamic and this pressure that consumers are going to be under with much higher oil prices and higher commodities in general, food prices, should, I would expect, weigh on Amazon stock at some point. So at the very least, having that buyback could be helpful. So I don't know if that buyback's anticipatory or if it's purely reaction to the stock price. But I look at this and I'm thinking, this is if things continue to do well, if they continue to grow, it's very possible that there are challenges that this does not incorporate. And of course, once again, a hypothetical valuation framework. Stock price can go way higher, way lower than this. I'm just trying to say what's a rational penciling this out, what's, trying to use reasonable assumptions. And also this $10 billion, it's really not that much at the end of the day. It's sort of, this is a buyback for ants. I mean, what you're looking at is $10 billion on a $1.5 trillion company, like 0.6% of the stock. So it's really just, I'd argue, offsetting some of their dilution, their stock-based compensation. So yeah, it's not really a big deal. I mean, it's more just a signaling thing. That said, I would be concerned if they were saying, yeah, we're looking at $100 billion buyback. And that might surprise you because you might think like, well, Daniel, if they're doing $100 billion buyback, wouldn't that be great? Because, then they're saying the stock's really cheap. I don't think the stock's like crazy cheap. I think it's quite reasonable. I think there will be some macro headwinds that they're going to be dealing with in the coming quarters. But if they were to announce a much bigger buyback, I would say that's actually a concern, because when you look at how they're spending their cash flows, and let's look in 2021, for example, they were actually net cash burn, where they generated $46 billion in operating cash flow, but they were reinvesting a lot of it into property and equipment and acquisitions. And so you could see, yes, the business is still growing. It's still increasingly profitable. AWS is a big component of that. Still, significant operating cash flows, but they're just still reinvesting significantly in the business. So I would be concerned if I were to see not a $10 billion buyback, but like $100 or $200 billion buyback, because then that would suggest, this is closer to day two. In the words of Jeff Bezos, of like, hey, we're running out of ideas. Let's just put capital to work. And that's more of a story that like Warren Buffett would do, the capital allocation approach of saying, hey, I'm not, reinvesting in these growth opportunities. I'm investing in individual businesses. So if I were to see that Amazon was doing something like that, it would make me think you've run out of these other bets that you think have a lot of potential, to change the world and to drive immense value over time. So does that mean the fundamental growth vector for Amazon has changed? So overall, it's sort of like mixed feelings seeing these things. None of these things make me go like, oh, this is amazing. None of that really makes me think that. It's very on the margin type of aspect. Overall, in summary, though, I still think Amazon is an unrivaled business. I still think the stock price is quite reasonable. You can see how the valuation has come in. I just, there are some macro concerns here that they're sort of holding me back from saying, yeah, I want to make this a big bet or something like that. I'd absolutely love to hear your thoughts if you're a big Amazon shareholder or you're super excited about that 20-for-1 stock split. You're ready to get your options on with Amazon. And also, if you're interested in joining a community of investors looking for exceptional companies, looking for hopefully maybe that next Amazon, looking for interesting ideas, check out unrivaledinvesting.com, click join the journey. We're all looking to learn, myself included, and so we have an exclusive Discord where I'm interacting on a regular basis. And if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.